Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we began the second module of our Forex trading course with a look at how to set up a free real-time demo trading account so we can learn how to trade the Forex market in real time without risking any real capital. In today's lesson we're going to begin our discussion on the logistics of trading foreign exchange with a look at how to read the currency quote. So let's get started.
Okay, so the first thing that we're going to do here is log into our demo trading account. So if you haven't done so already, you might want to pause this video and click the free demo registration link above this video if you're watching on Informed Trades, or in the description section if you're watching on YouTube. Okay, once you've done that, you'll get the icon on your desktop here, the trading station icon. We're going to click that, which should bring up the login box like we did in yesterday's lesson. Okay, once we have that up, we're going to enter in our username and password that you should have received when you registered for your free demo account. Okay, and once logged into the platform, the first thing that you're probably going to notice is the dealing rates window, which has a bunch of currency pairs listed and rates which are moving up and down and flashing. As you'll also notice in this window, each currency pair has two rates listed, and they're moving up and down together in tandem. So this is what is known as the bid and ask of each currency pair. And for the purposes of this lesson, we're going to look at only the ask or second currency in the pair, because we're going to go over the bid and ask and exactly what that is in a later lesson. Okay, so don't be confused by that at this point. The first thing that's important to understand about trading the foreign exchange market is that currencies are quoted in pairs. Another way of looking at this is that the value of a currency is always determined by comparing that currency with another currency. Okay, so for example, the first currency which we're going to see here, or that you see here in the dealing rates window, is the Euro-US dollar currency pair. And as of this lesson, as you can see here, the Euro dollar is trading at 157.07. All right. In the foreign exchange market, the first currency in the pair is referred to as the base currency, and the second currency in the pair is referred to as the counter currency. So what you're seeing here when you look at that quote of 157.07 is how many of the second currency or the counter currency in the pair it takes to buy one of the first or base currency in the pair. So in this example, we're looking at a quote for euro dollar of 157.07, and what this means is that it takes 157.07 US dollars to buy 1 euro. Okay, as you can see here in the foreign exchange market, the euro dollar pair is quoted out to 4 decimal places, or in this case to 1/100th of a cent. Most currencies are quoted to 4 decimal places in FX, with an exception being yen-based currency pairs. All right, and so moving across the quote window to the right, the next currency that we're going to see there is the dollar-yen currency pair, okay, or the U.S. dollar-Japanese yen currency pair. And notice that in this example, where the euro was the base currency in the last example, the U.S. dollar is the base currency in this example, and the Japanese yen is the counter currency. Okay, and so as of this lesson, as we can see here as well, right now the dollar-yen is trading at right around 102.41. Okay, so remembering that the currency quote shows how many of the counter currency in the pair it takes to buy one of the base currency, we know that a quote of 102.41, or now 102.42, it's just moved up to, for the dollar yen, means that it currently takes 102.42 yen to buy 1 US dollar. Okay. As we discussed in our lesson on the main currencies of the world, the euro, yen, pound, Swiss franc, Australian dollar, New Zealand dollar, and Canadian dollar are the most actively traded currencies in the world against the U.S. dollar. Okay, as you can see here in the quotes window, we have all those currencies quoted against the U.S. dollar. Okay. You can see all those there. As you can also see, however, there are also currencies which include two of those currencies we just mentioned, but which do not include the U.S. dollar in the pair. An example here would be the Euro-Swiss currency pair. Okay. Currency pairs which do not include the U.S. dollar are referred to as cross currencies. All right. So, but the quoting convention remains exactly the same. So, as one final example here for this cross currency of the Euro Swiss, we see that the Euro Swiss is currently trading right around 1:59.30. Okay, as of this lesson. And from the above examples, from the examples we just did, we know that this quote is how many of the counter currency it takes to buy one of the base currency. So with this in mind, we know that this quote means that it takes 159.30, or fluctuating back there, just hit 29, so 159.30 Swiss francs to buy €1. Okay? So for tonight's homework session, I would like everyone to pick two currency pairs quickly and simply list what the quote is for that currency pair, not one of the ones that we've covered, just as we've done for these three currencies. If you'd like to post your answers in the comment section below the video, that might be neat to do. Okay, so that's our lesson for today. And tomorrow's lesson, we're going to look at what it means when a quote for a particular currency pair increases or decreases. So we hope to see you in that lesson. As always, if you have any questions or comments, please feel free to leave them in the comment section below. And good luck with your trading.